All right, so stock market has been interesting, and I think everybody should be investing, right? Like even if you dollar cost average into a Roth IRA, into the S&P 500, the Nasdaq, VOO, QQQ, VTI, you just dollar cost average for 30 years, right? Even if you go that route, everyone should be doing it. It's just a tried and true way of setting yourself up for retirement, right? The market has been crazy, and we had a correction recently, a 10% correction. It's been insane. And I've been buying this entire dip. And today's news came in. The stock market is closed. It's 4 o'clock. It's 4:12. And the S&P 500 staged a rebound after a $5 trillion plunge. Insane, because of all the crazy the stuff that's happening around the world in politics with Trump's tariffs and the trade wars. All that stuff has put a lot of fear into people. But I want to take this current event, and I just want to learn from it, if you guys don't mind. So, what caused this 10% correction? Apparently, what a lot of people believe was the catalyst was President Trump's 200% tariff on European wine. I mean, on their wine, just based on, Europe's proposed American whiskey tax. Like, these reciprocal taxes is what's scaring the market, but is he wrong for it? I don't know. I'll leave that up to you guys. But it is scary because it changes things. It changes things economically. And so investors, they have to make a decision. If they're rattled, they're going to seek safe havens like gold, liquid. They're going to liquidate their stocks. They're going to put into gold, into bonds, something safer, right? And gold has gone up $3,000 an ounce. So now's not the time to go buy gold. And so for me, I wanted to see, are there instances that we can go back to? History leaves clues that we can go back to and learn what to look forward to in the future here if this continues, which it will. So apparently in 2018, the US and China, we entered a trade war back then. The US imposed tariffs on Chinese goods, leading to a tit for tat escalation. Pretty much what we're seeing with Mexico, with Canada, with Europe, with everybody, damn it. Now, what happened? How did this unfold? Interestingly enough, equities recovered most of the time after initial fears subsided, right? So just like now, people are scared initially. They get rattled, they start making moves with their money. And that's what was happening in 2018 and 2019. But after a few days, once the smoke clears, people start feeling a little bit more comfortable. It's not the end of the world, and equities make a rebound. And I was watching another YouTuber who really put in some data. Damn, what's his name? He's way more into the stock market than I am. Oh yeah, the guy's over at MoneyVest. I like this guy's channel. He's always updating us on the stock market, and he tells us how it is. I like his channel. I would definitely check it out. And so, anyways, with the research that he did, he was talking about how he had kind of like a tier chart, and he compared historicals. The last time we had a 3 day in a row dip, a correction, 4 days in a row, 5 days in a row, and what was the likeliness that it would hit a sixth day, a seventh day, an eighth day in a row? I don't think any corrections lasted more than 8 days where there was a 10% dip. And the odds of it hitting again today were low. So I went and I loaded up on options. That, and I just kept dollar cost averaging. I put a little bit more than I typically do on a weekly basis. The last few weeks, I've been putting more into the S&P, into QQQ, and into VTI. This is not investing advice. I'm just telling you guys what I did with the information that I learned. Now, are there any other examples that we can look at historically? Let's check this out. So this was literally about to be a nuclear war between us and Cuba. Not Cuba, but the Soviet Union, because in Cuba, the Soviet Union had missiles apparently. And just like we saw with the trade war, that Trump's trade war, there were massive initial sell-offs, but similar to what's happened today with the market, it rebounded. The equities were oversold, and the market rebounded. And this is a nuclear war we're talking about, where the Soviet Union has missiles as close to where you can ride a jet ski uh to. Like it was that close to Florida, for example. Pretty scary stuff. You got to have thick skin to keep investing in that scenario, right? And so I guess I share all that with you guys to say this. While tariffs and geopolitical tensions can cause immediate market turndowns, I think history shows that the market often stabilizes. You know, I say this humbly, but this is America. This is the United States of America, and it is a superpower, and it is very important for the entire world. Sometimes I go and I look at, like, how the Roman Empire fall, for example, but I think America is completely different in that you can agree or disagree with what's going on politically. We have a certain system, and I think there's a lot of pull and tug, and there's a lot of fighting and argument, but it tends to balance out once all the fear, once time tells, right? And what it's told me over time is it's probably better not to bet against the United States economy. It's probably better off to dollar cost average in the long term. And America has seen way worse than we're seeing today, even though for some reason there are people like, I don't know if you guys saw Rosie O'Donnell. She left America. Uh, these are people who have seen real wars, people who have seen, I mean, real financial crises. And I'm not saying that what's going on in the world today isn't a big deal. It is, but what I'm saying is we've seen worse, and the market always stabilizes and it continues into an upward trajectory long term. And market in the short term, the way that markets react is all psychological and emotional. You got people who panic. If people could just leave the country by pressing a button, a lot of people would panic and dip. And they'd be doing it based on emotions and probably regretting it a month later, right? But that's the stock market. It's as easy as pushing a button to sell stuff. And so panic selling can exacerbate declines, while measured responses can help stabilize markets. And so, despite the current turbulence, I think I'm maintaining my confidence in the US economy in the long term. Like, I'm not playing this game where I'm going to, you know, be fear baited into selling everything in the stock market, into selling my house, into selling my business. Don't get me wrong, still stay educated and understand what's going on with current events. That way you can make smart decisions in the short term. But in the long term, man, it's got to be real, real bad, you know? And I think if you understand today's financial system is not backed by gold, you understand there's a lot of tools, there's a lot of strategies that the US can do to face economic challenges. Not just that, but American companies have consistently demonstrated the ability to innovate, to adapt, to pivot when they need to. And I think I have a lot of conviction in that the companies that I love will stay competitive no matter what. Will they have some dips, some challenges? Of course. But I think they'll overcome them. And so that's why um, when people are obviously panic selling based on speculation and not concrete um, results or concrete reality, that's a good sign for me to start buying more equities, investing more. And there's going to be a rebound, and there's probably going to be another dip the next time, the next trade war, the next breaking news. Shoot, tomorrow there might be a dip. But history suggests that these corrections, they're part of the market's natural cycle. And as always, it's crucial to stay informed, keep a long-term perspective. I would avoid making impulsive decisions based on your emotions and based on short-term market movements. That's why I don't like day trading and stuff like that. I like to focus on my main thing, my main job, give that all my attention. Then you're not gonna fall victim to uh, short-term emotional decisions. I think the U.S. Economy has weathered so many storms, and it's emerged stronger every single time. Look at the pandemic, the recession. Those are the ones that I've seen. But even before then, you had world wars and depressions, and man. And so I think, based on history, betting on the US's America's resilience, I think that's a winning strategy because I don't think there's a better one. So anyways, if you guys found this informing, interesting, if you got any comments to make below, I'd love to read them. And I'll see you guys in the next video.